Good morning, good afternoon, and good evening. It's Doc from North America. So it's another fun-filled day across the planet. Let's see what we got going on today. One of the things that caught my eye was watching the Swiss franc lift up. That was kind of curious. Uh, the dollar, as every time you think the dollar is going to go chill and relax and not, be too aggressive, it seems to perk its head up, which is very fascinating. What else I got to say about the first opening thoughts of this, market today? The earnings were out for the two biggies. I guess you could say Goldman and, if you had to consider the old financial market with the new era of quantitative easing era, Goldman and JPM are probably like the big pillars of it at this point, since they've consumed so much more, of the smaller operations. So their earnings didn't exactly get everybody too excited, but there's a lot, as they say, there's a lot of capital sloshing around, so they've got to put the money somewhere. All right, let me go over to the chat line and see what's going on over there. Let's see, we'll go like that. Get rid of that. And here we go there. We'll be able to see if anybody's in the hood. Let's see. And as you can see there's the gold this morning. Probably the greatest disappointment of the 21st century. The way, as I've said many a time here, if you'd have told me in 2007 or 2006 what would gold be at and what would silver be at in 2021, if all these things are going on that we're seeing, 18 trillion in minus, insane concepts of spending money and a Federal Reserve now playing the buyer of last resort in the open markets, basically. And so that alone, if you had told me all those things, I would have been like, and I say this over and over, and probably some people here get tired of hearing it. 3,000 gold, 5,000 gold with a spike that probably drove it towards the tens at one point. And same thing with silver. You would think it's a $70 silver right now with spikes up to 100, that type of thing. But no, we don't see that at all. It's actually the opposite, and that's how the cryptocurrency universe got going, or crypto asset class has evolved. And so, we follow the markets through the currencies, the way they move. We look at them through the commodities like oil and gold and silver, and we look at them at the same time. We actually look at the commodities themselves, get a good flavor of potential inflation. Myself, that's why they have the cowboy on the front of the, when you go in and you look at DocDow, me leaning up against like a pickup truck or something like that, because we do a little farming here. I've been a member of the Grange for decades, and so forth and so on. Growing up in the country, understanding the agricultural side of life. So we know that this is all one big ball of wax, I guess you could say, or one big ball of rubber bands, however you want to look at it, but it all functions that way. What do we got here? Hello. How about if I always like, I'm an old floor trader, so my natural tendency is like to literally call you MA. Because it's Mahadi Ayar, and to me it's just like MA. So, hey MA, how you doing? It's fast and sweet. We try to make things simple. Words are actually, we're from a world where words meant something. So in other words, if everybody knows you as MA, then it's faster and easier, and we can go from there. So hello to you. Welcome to the webinar. This is what we like to refer to as the electronic trading pit. We're in a proactive universe now. Most people write books and have written books about reactive trading and successes, but they don't really talk a lot about the proactive universe. So, and you, oh yeah, things are cool. No complaints. The vegetables look good. Corn looks great. The soybeans are canopying much faster than normal. We're getting a lot of sunshine and rain every day around here, so life is good. And so, we're not complaining at all. Let me think. So yeah, everything's good, and the markets have been, you know, irritating. You know, in the fact that they don't ebb and flow like they used to. So it takes a different type of mental attitude about it. Um, but you know, due to experience and worried about a P&L all the time, even if I don't have to use it, you know, I still like to, you know, I don't like losses. I'm one of those that hates losses. Oh, you can ask. I always say, there are no stupid questions in trading. There are no dumb questions in trading and money. You know, no dumb questions or irresponsible questions. All there are short answers or long answers. So you can ask away, and I always say it's cheaper by the dozen as far as I'm concerned. Because you never know what a question will lead us to. And I mean me and dozens of other traders. You may come up with something that, you know, we didn't even think about. You may not have the right direction. You may have all the right direction. But the subject itself in a reactive world didn't mean as much. But now that we live in a proactive situation where orders are not coming at us, basically any question is a good question as far as I'm concerned. Do you consider the intermarket correlations? Well, we try to find anything that leads to anything, okay? And so, you know, we know that there are many less desks like in grade school or high school, or where you sit in a classroom and you sit at a desk. We know there are less desk activity than there used to be since quantitative easing. And so when you say the intermarket correlations, you know, you're talking about delivery, you're talking about exercise for currencies, the 2.5 days or the 2-day delivery, depending on, you know, if it's yen versus regular, you know, euro or something underneath, you know, like Australian. Interest rates, inflation. There are many market correlations between different products. You know, so like we look at the South African rand and we look at the metals markets, and so 4 major markets. I mean, when you say 4 major markets, to me, there's one major market, that's the bond market on the planet, okay, and then there is the currency market, which is a much smaller market than the bond market, and then there is the oil and commodity market. Oil is much bigger than the rest of it. Then there's a small market in the metals market. And then there's the stock market, which is incredibly small compared to all those others. Now, you know, they're all important to the individual who focuses in on them. So, yeah, just give me a flavor of what you're talking about. You call it currency. Well, first of all, it's bonds. Bonds are much bigger than currencies. And then currencies are a nice, smoother trading product. And then the commodities get broken down into sectors, solely because oil is just such a dominant, high beta type of product forever. And then you have like the grains and the metals and so forth. And metals are being used as, remember, they're more hat and less cattle, and we used to like to say around here. And then stocks are minuscule to the others. So, Moses, how you doing? You know, so try, you know, and so we do look at all 4 or 5 or 6, however you want to, you know, I break the commodities down, and then we know that the bond market is the premier of the planet. You know, trillions upon trillions upon trillions are invested in the bond market. It's an equity market, but it's still a bond market. Yeah, so I mean, we do look at them in a cross pattern way, but they don't really, you know, sometimes they do and sometimes they don't. Does one lead the other? When I was a young man, the currencies used to lead the equity market by about 1.5 days to 2 days in volatility. Oh yeah, yeah. That's the New York Stock Exchange actually was a bond exchange first, and under the Buttonwood Tree, they were trading bonds first, with George Washington and so forth. And then stocks became very powerful very quickly, but they were more towards, in the 1830s and so forth, was more of the railroad stocks. That was the lead stock indice at the time. And then it branched off from there, you know, as Industrial Revolution became very powerful. The currency markets, I would have to say, which one's the best to trade? Seems to be the currency markets to me. They're the most and we can show you when we look at, you know, the screen share, how smoother the currency markets can be compared to some of the others. Yeah, there's a lot. Stocks lag bonds. In many ways, stocks follow bonds. They're really a pairs trade in many ways, because when interest rates are dropping, you see the major tech companies, or like a Facebook and a Google and so forth, Apple and all, go up in value because they're very asset or free flowing cash intense, and they need a lot of cash. Whereas like a Procter and Gamble, or like an Exxon Mobil and so forth, is nowhere near as intense, and or like a Procter. Did I say Procter and Gamble? I'm thinking of Colgate Palmolive also. Like things like that. The home products type of things, and then you have a cross in between them. Probably in some ways, when you're looking at that, you have to think of the Michael Dell formula. Imagine 40 years ago, and previously hundreds of years before that, if you told people, with the widget economics theory, having stuff on the shelf, inventory, labor costs, warehouse costs, the whole bit, Now, Michael Dell develops a system where it's not built until you order it, and when you order it, you can have it in 24 or 48 hours. So there's a real where we look at things, as you would refer to it, as consider the intermarkets between one area versus another, but we do it with a flair of post QE, or is it post? Yeah, I guess you could call it post. It's post QE versus the era of when there wasn't a QE at all, and funds and the trading floors and the brokerage houses had more input into the value and price discovery. Now there is no price discovery. Basically, that concept is pretty much gone, and the only real price discovery is what you see the price of something that moment, and it's backed by the Federal Reserve. In other words, that's why they keep on saying the Fed gives out free put options. And see, yen did well with the CPI figures. Ooh, I didn't even look at that yet. Let's see what that looks like. Let's I just want to see what the stocks are doing. Let's see. We're going to go to a quick intraday and look at the stocks. Let's see, which one's that? There it is, right there. There we go. So the Dow now is down 55 points. The NASDAQ is down 10 points. And the S&P 500 is down 8 points. And so we can see there that it put some pressure in there. We're thinking, if it wasn't for the Federal Reserve being the buyer of last resort, we would assume by now the markets would have topped out and gone down a while ago, weeks ago. And every day that it doesn't only opens the doorway for some type of big slam coming. But the problem is that the Federal Reserve will have to have a good reason not to get involved. Right now they're very proactive, and anytime there's a sell-off in the marketplace, they're very quick to lend money out overnight for free to institutions like Citadel and BlackRock and Goldman Sachs and so forth. They lend it out to them and hand them money and say, okay, now you can invest this for free. And what happens is that those companies are smart, and that's how he was making his money. That's how he became popular. He was doing reversals and conversions, and then what happened was, when interest rates dropped below the 12% area, he couldn't get a 12% yield anymore, And so what he did is he started to do what they call split reversal conversions, which is a 50-50 chance instead of a 100% chance of win. And that's when he got in trouble. So, yeah, I mean, I think I've answered all that. If anything didn't make any sense or you don't understand it, please do not be afraid to ask for me to break down any one of those particular ideas I just threw out there. If you didn't understand any of it, trust me, it's important for people to understand. That's why I do a broadcast outside the country more than in it, because I don't want to be blocked from talking bad things about Bloomberg or CNBC and the Federal Reserve, and I could go on for a while. Trust me. All right, let's see. Let's look at some of the questions here. So Alan says, "Hi Doc, I was watching the inflation figures just released. Yeah, I heard that there was a feeling out there that there's so much cash out there that the fund managers are getting a little picky now, even with the free money." Let's see. I said hi to Moses. Let's see. Alan says the dollar yen did well with the CPI. Let's see what's going on with that. Let's go over to the currency market. We've rolled along here just talking about answering the one question that we have not taken a look at that. Let's move this off the screen for a second there, and let's go over and take a look at the yen right there. And there it is, dollar yen. You can see there it's trying to get into the daily buy today. It's up through the lines. We've been in a weekly buy since this point right here. That's what this line right there is telling you. That's the weekly buy. And then the spreadsheet, when you see anybody new here, the spreadsheet itself is what we refer to as a fact check spreadsheet. What it does is it tells you, we document our signals. And so when you see, like it says WB, means it's been in a weekly sell for, or a weekly buy for 7 weeks. You see wheat has been in a weekly sell for 7 weeks. You can see corn and soybeans slipped back into a weekly sell last week, 1 week. We document our numbers. So you have a documentation. Bitcoin's been in a weekly sell for 14 weeks. Let's see. S&P 500 has been in a daily buy for 16 days. Then we do the same. Whoa, let's hope I didn't just move something there. Not even sure what happened there. Okay, let's cancel. There we are. And so then, like you can see right here, we follow the daily trends with the weekly trends. We want them to be correlated together when you're trading a hard delta. It depends. If you're using options or binaries, it's a different story. But when you're using just the underlying product itself, it's important to have them both in line. So in a case like here, copper's weekly sell 6 weeks, and it's been in a daily sell for 8 days. That means that you can be shorted for the last 8 days. Now we go and take a look at copper real quick, and then we'll come back to the yen just for an example situation there. And there is, where's copper? There. Oh, it's right there. It's up on the screen. All right, so it's been in the sell since here. It's drifted down, drifted up. You can see here's the weekly sell. That sell there was a wonderful, what we would like to refer to as winner chicken dinner. This one was a short-lived win, not bad, about 10 cents or something like that. We always try to convince people to pay attention to money management. If it's an option spread or a binary, it's a lot different. You put it on, you're not going to get stopped out. But if you're trading the hard delta, you got to be more cautious. So you've got to try to line the weeklies with the dailies. All right, I think I've answered that. Now let's go back to the yen again and see what's going on with the yen. Where are we at? Right there, there's the yen. You can see it's flirting with the daily buy as we speak. We're going to throw a little line up here like that. By the end of the day, if this white line and histogram are above the 0 line, it pushes it into a buy. And at the same time, we've been in the weekly buy since back here in the, what is that, the 108-ish area, 109 area, 108 and a half, something like that. And so the uptrend was every time you get a buy signal, you take the buys. When you get a sell signal, just take profits. You don't get short because we're why traders? We're in a weekly buy. Now again, if you're trading the options and binaries, you can get away with that stuff and not get punished too hard. Let's see, now, Alan says, let's see, dollar yen did well with CPI. It spiked to 110.55. Yeah, let's see, right there I got it at 110.53 high, 534 high, and right now it's trading at 47. So it's only 6 pips off. It's high right there. And I wouldn't call that a drop. It's just, remember, for every buyer there's a seller. If you don't take a profit when you're making money, the next time you're selling, if you buy something and you don't take a profit when it goes up in value, the next time you're selling it is when you lose money, and that's something that we don't like. That's definitely something we don't like. So we don't do that stuff. We try to, let's put it this way, we try to stay away from it. That's for sure. We're right 8.5 out of 10 times, so we stay away from it relatively well, and we keep our stops tight when it's a hard delta, and if it's an option spread, then we're not worried about it. We can always turn it into some other spread. All right, let's see, what else can we say about any of this? I guess that's about it. We can go through the rotation. Anybody sees anything they want to see, just shout it out. We will stop and go and take a look at it, because again, that's part of the great opportunity here, is to get other ideas and possibly find a diamond in the rough. You never know. From trade, we found many a trade from people asking about something. Now here you can see, here's the dollar Swiss, and when this thing obviously is going down, the dollar is going down in value, and the Swiss is gaining in value by it going down, and vice versa. And so you can see here it's firm, a little firm there. Now when we go over to Chicago Quant and take a look at it here, let's see, where is it at? Right there. You see it's lifting up. Matter of fact, not only is it lifting up, you can see this right. Oh, you can't see that. Let's move this up a little bit too. Move that over, like so. And as you can see here, let's move this down a little bit. You can see here it's trying to get into the daily buy. So that means the dollar is firming up again. It also works on, what it is I use easy language. I wrote the codes in easy language a few decades back and have not converted to C+ or anything like that. I keep on promising to do that and I never get around to it. But TradeStation and anything that will read C+, C+, anything that will read easy language, we can put it on. And so that's what it comes down to. It's nothing more than that. It's just me being, I hate to use the word lazy, but I just don't find the time to convert it. And I keep on thinking I probably can convert it in a matter of 4 or 5 hours, but I don't seem to find the time to do that. Between trading, doing the webinar, and trading. I like trading. When you have a system that works, you kind of lean towards that. You like the trade, and so I keep on saying I'm going to do it, and I don't. But one day, don't be surprised, it may happen. We'll have it on a C+. I am very close. I can say this over the last decade. I can feel it. It's very close for me to convert to the C+. I can feel it, but so far I haven't done it. Okay, so TradeStation or Multichart are the only two that I know that use C+. They're not C+. Easy language. There might be a few others out there I don't know about. If you find them, let me know. I'm curious. See, that's why I call this the electronic trading pit. I want ideas. I like input. I don't judge the input. I just tell you what I know about the input. It may sound stupid, but the more you explore something someone asks or suggests, sometimes you don't know if you're going to find something right or wrong. It's like one moment, people are rolling up stalks of corn after harvesting, and the cows like to lay in it and chew on it. And it's like, well, it's for free because you already ran the machine over that area anyway, so roll it up. It's like anything. You never know. If I'd have said to you 40 years ago, oh yeah, let's roll up the corn stalks and let the cows sit in it and eat it, if someone would say, you're out of your mind. I remember I remember when the Farm Bureau said that 100 that you were going to get 100 bushels out of an acre, and a bunch of the farmers looked at that and walked out of the room. Remember when I remember hearing the stories when they said you were going to get 39 bushels, and people got up and walked out of the room. Now we get 200 bushels plus out of an acre. So you never know what's going to be fact after a while. I want to get what? Growing more bushels to an acre? Well, I guess if you rotate your crops well enough and buy the right seed from the right provider, you know, you're going to get, especially that first year when you haven't rotated for a while and you put something in there, boy, does it yield. But anyway, what do you, I want to get it. Are you talking about the software? Okay. Well, you know, I think, you know, talk to Robin about that. And you can go from there. Yeah, you just have to, you know, just hunt down who your provider is. And, you know, I know Dukascopy has an ability to feed multi-chart and TradeStation. You know, you have to look at your equity base and so forth and figure out which one is friendly towards it and go from there. I see here, let me bring this up on the screen. Look at this. The stock market is backing off a little bit more, which is always interesting. You just noted that big bad wolf called the Federal Reserve is out there somewhere, just waiting to grab Little Red Riding Hood. So, let's see. Where do we go from here? Let's jump over to, I'm going to get rid of that off the screen. And let's go over to euros. See what the euro is doing. There's the euro. Oh, they're pushing that down even more today. Okay. So it went into a daily buy a couple days ago, right here, and could not hold up on it. Now, again, it's in the weekly sell, so you're not really getting long in here. And if you did, you better do it through something very low risk, like, you know, binaries or option spreads, that type of thing. And you can see the pressure's on there. Then there is British pound. You see there. British pound starting to back off again, but not like the euro, which is kind of interesting. You're getting a volatility signal of a green and red and dot there, but you can see here it's still holding up. It's still holding above the line. Now that's been in a weekly sell since back in here this week, I guess where the box is at. So it confirmed it at the end of that week. So we went into the weekly sell somewhere in here, confirmed it by closing that week below it. And next thing you know is, you know, you can see most of that week it was below the line right there. And then sure enough, it had been in a daily sell, so you could take a shot at shorts, and it would have become a winner chicken dinner there. Then you got another sell here. It was nice. And then cable got a short-lived one here, and it was just a one-dayer. So you hope that you have good money management going on, like you would have covered it before you took a loss, and I hope you took some profits at the same time. That's the whole idea. Is you don't plant all at once, and you don't harvest all at once. Harvest in slices or tranches, except for some of the big fields. But I mean, you do this field and you do that field and so forth. Anyway, end result is that you can't do everything all at once. You want to try to take profits. That's what we're here for, profits. The idea is to make money, not to trade. I don't recommend trading. I recommend making money. That's what I talk about all the time, is making money. All right, let's see. So that's cable. Let's go over to the Turkish lira. We'd like to refer to that as dessert. It's been one fun product to watch over the last couple of years. I'm saddened by the population there in Turkey, having to watch their currency go from 1.5 to 8.5. But you know, it's been a fascinating trade, and our math has been really good on it. And so it's very rare for our math to not be good on something. Physical gold bars coins not aligned with spot gold. No, not at all. You know, Robin and I talk about that all the time. You try to go out and go to a flea market and try to buy gold and silver, you know, on physical. You go to a shop and try to buy the physical. You even try to go to the into the treasuries, like the Philadelphia Bank Reserve here, or you know, the St. Louis one and so forth. You try to buy gold and silver, and there's a lag, and you know it's a challenge, and you can only get so much, and you know it's there's that's the thing that always blows my mind, is that's why cryptos have become a legitimate tool, because they are taking up the position of flight to safety. And gold and silver used to be the flight to safety. And the way the central banks control it now, it's not the flight to safety anymore. Like I said, it should be, silver should be 70 an ounce, not like 26 or whatever. Let's go take a look at silver. There's silver right there, September silver. You can see it's been in a weekly sell since back here in the 28s. Right up in here, we went into the weekly sell. See it right there. Can you see that? No, you can't. Let's fix this. So you can see here, it went into the weekly sell right there. And then you can see, it rolled over. Each daily sell was a nice little win. Sometimes, very quick, instant gratifications. Sometimes not. There's a sell right there, and that one, it just popped back up, and then a day later it gave it back down to you again. Again, that's that hard delta. Then the next time, it made 3 times more than what you would have lost here, and then the next time here, again, made like 5 times more than you lost back further. In other words, usually our math, it's very rare over the last 45, 50 years not to, if you have a loss, it will make it back more than once. So let's see, 1 ounce silver eagles are near $40 in the US now. And so, and you can see here in the futures market, or the electronic market, it's trading at 26, and I've been watching that go on for months and years now. So it's physical is definitely much more in demand than the electronic markets. They like to say, oh, well, they're collectibles. Yeah, right. And I'm sure there are collectibles that are driven by a lack of inventory. But overall, I think that's just a hidden, an average excuse. Physical is physical. You melt it, it is what it is. Let's see, where do we go from there? Oh, and then gold. Gold's the same situation. Gold goes into the sell here. It goes sideways and up. We're in a weekly sell since here, and there's the daily sell, and it hasn't been the most explosive action. In other words, it missed this action here. Let's see, where's we at? We were in the sell at this point off of this volatility signal the day before this, and then it dropped. So you kind of kept you out of the damage, but you didn't make much money from it. That's all. And then when you finally get into the position, you make like 30, 40 bucks. It's the way it goes sometimes. In this case here, that's that noise. That's why I always warn people about the metals markets in the States. Stay away from it as best as you can, because it's not a good market. The central banks are in there interfering with it all the time, and so we can normally like we've caught some major moves here over the years, but just not, and even this year, you can see in April. We went into the weekly buy. We'd been in the daily buy from here. We climbed into the weekly buy, and we stayed in the daily and weekly buy all the way out to here. So, it's okay, but when you have Big Brother on top of you all the time, it makes it very, very tough. Here's another good one. It puts you back into a daily buy here, and you ride that out all the way to here, literally out to here. I'm sure you would have been taking profits throughout all that. There's no way you're going to let it go from the low 18s to the low 19s without taking some profit. Those cows have got to go to market. Same thing with the hogs. Historically, the ratio of gold to silver is 1 ounce of gold equals 40 ounces of silver. So silver is very manipulated. Oh yeah, yeah. The whole metals market is because they use it as a currency, and also not only it's a psychological factor. Now you can see here in the last, I don't know, was it after all those wins we had, you can see here in June, we get into a sell and it goes back into a daily buy again, and it goes up, I don't know, $20, $30. That's all it does over a 4 or 5 day period. And then we get the volatility signal. When you get a red and green dot, that's a volatility signal that volatility is coming. At the same time, I believe we were underneath here. In other words, we were warning. You got the green line breaking the manifold, and things are really breaking down here. And it's like, be cautious. We were telling people to be cautious. We didn't expect, a 2-day drop like that. Also, this is a different futures contract. I think in the older futures contract back then, what was it, the June contract or something like that, I think we picked it up. We actually caught that. But here in the back month of the August, it doesn't catch it. It missed it. Sometimes back months we've seen that in cattle and soybean oil and so forth, and red wheat and all. We've seen where the back months are the leaders more than they are the followers, but then that's new crop versus old, and that's an intermarket thing going on again. And so there's a lot of, some back contangos, as they call it on the trading floors, are worth watching and some are not. When it comes to the metals market, it's not. It's definitely not. So, let's see now, where are we at? So that's the metals market, and then what we usually do is we look at Canadian too from there. Let's go over to the Canadian. There's Canadian. And you can see it dropped into the sell the last couple of days and didn't really go anywhere. But we're in a weekly buy, so you're not supposed to be short to begin with. Again, only if you're doing it in an option spread. So you're not taking much heat from it going in the wrong direction. Also, you don't really want to, you would be really wanting to be long. I mean, we're in a weekly buy from here. So, I mean, you're not exactly in the mode to go short. You're in the mode to be long. So if anything, you're long something and it goes into the sell. And then it comes right back up to where you possibly were long from here, or it ran up to there, and so forth. In other words, you got to follow the two, the daily and the weekly together. Please check out ES. Sure. Let's take a look at the daily to start off with. Right there. You can see it's backing off a little bit. We've been in a daily buy in that thing for, I don't know, what did I say? Look over in the fact check spreadsheet. Line 26, 16 days in a daily buy in that thing. And we've been this is the 4th week in a weekly buy. So this thing's just been on a rampage because the central bank doesn't want, they need these things to stay firm. Or they need interest rates to be low. That's pretty much what it comes down to, so the government can be abusive to borrowing. Here, let's take a look at it on an intraday basis too, since you threw it out there. And I love intraday. So we're going to bring that up, like so. And then here is my intraday, the 639 tick. And as you can see, I'm using 2 of my tools. The middle one is the gas line, and the top one is gas line, and the bottom one is gas. Now, what's the difference? The difference is that the plot 1 and plot 4 we watch, and we look for the standard deviation expansion above the nonlinear time manifold. That's what these lines are right there. Now, you can see they're the same lines right here. Only difference is that it has 2 of them. It's doing a standard deviation of the time manifolds, whereas up top, it's doing a standard deviation of the plot 1 and plot 4 versus the plot 2 and 3. And so we're looking at it in 2 different characteristics. There's a lot of insight in here. It was something I did with John Bollinger. I used to do this TV show called The Guru Review back in the 80s. With John Bollinger. I'd be interviewed every couple of weeks. And then he started talking about standard deviation. I started looking at standard deviation. He created a standard deviation tool. I created one my own way and did not share it. And so basically what we're looking at is standard deviations of my math, and he's looking at the closing price standard deviation. I'm looking at the standard deviation from my math. So it's a little bit more sophisticated. And as you can see here, we'll widen this out. When the histogram becomes plus, we've got the green dot going, you can be long. This is a 639 tick. You can see right here, about, what was that, 2 minutes ago? I think that's 2 minutes ago. Is that 2 minutes ago? Yeah, it's 2 minutes ago. 2 minutes ago, it gave a sell signal and it went down in value. And then you get a volatility signal, you're getting 2 volatility signals, so this could be very interesting. We still haven't gotten into the buy, and it's trying to get into the buy here at this point. We know it's going up, that's for sure. Now at the same time, you can see the standard deviation from our time manifolds, which are nonlinear time manifolds, which is the way I've invented measuring time 40 some odd years ago to challenge the Higgs boson, is kind of very insightful. It gives us the edge over most mathematics. It gives us an edge over all mathematics because I have a totally different concept of time. And so imagine if you could tell why one part of the field grows a little bit more than the other. I could probably figure that out with my math. And obviously it's soil and so forth, and the amount of fertilizer and whatever's going on, but my math picks it up in a mathematical way. And so I can measure the lag. And so it does this for currencies, it does it for bonds, it does it for stocks, it does it for everything. Expanding galaxies, isotope particles, you name it, it does it. Now it gets into the buy. Now let's watch it from here. It went into the buy, and it did go up a little bit and then to go down, and let's see how much it holds up in here. Now we can see it's weakening. You can see here at the same time this manifold is being pierced, and so there's not a lot of buyers in here at that point. Matter of fact, look at it, it's going towards the minus now and getting ready to go short again. That's why money management is important. You know, when you're making some money, take some off and put a stop in. Don't give away your profits. We're here to make money, not to trade. Let's see, Rob, please check on the ES. Okay, so how's that, Robin? Is that good? Giving a live, showing you our intraday system here at the same time. It's all the same. It's the same math for dailies and weeklies and so forth. Tommy says we have a new record in FX option expires. Really? On Thursday, so oh, is that Japanese one you were watching? Thursday, so market will be held tight for. Oh no, it's AUD. Okay, didn't you find 3 billion over in yen yesterday, right? So this is 3.9. Wow, that's a lot for an Aussie. That's the open interest in the options on the strike. What's it? 75 strike. Let's jump over there. Oh, you can see it went into the sell for the short-term traders here. And look at it, it's frozen. It doesn't seem to care. Let's see if we can get a little bit more backing off. We're getting this breakdown, so I'd imagine this will break down. Let's go and take a quick look, and then we'll come back to this. You see it's ticking away live. Let's go take a look at yen really quick. Not yen, I'm sorry, Aussie. Let's go take a look at Aussie really quick. Where are you, Aussie? Aussie, you're around here somewhere. There it is. All right, so yeah, it's the 75 strike, right? Right there. So those option market has the 75 strike all locked in. And yeah, the yen is the 110.50, right? Exactly. Oh, now it's up to 4.3 billion. Wow, nice. They're really picking it up. Now let's jump over to the S&P. Well, that didn't last long. So gave us a volatility, and that's a loss right there. Let's see how this one goes and makes back. Let's see if it makes back all the money. Actually, it didn't get you into a buy. You're not able to go into a buy because you got the red and green and you got this. Now it's trying to give you a buy. Let's see, now it gives you a buy. Now be long. Boy, it's really lethargic, isn't it? Maybe it'll give a quick little pop here. Come on, let's see what you're doing here. Wow. So they're building, even going into the expiration, they're building up a lot. They've picked up 1.3 billion in open interest. That's wild, just in one day. And then, how do you relate to that, Alan, when it comes to the Aussie? Isn't that kind of odd for the currency itself? You know, for it to have that much open interest. Just look how lethargic this buy is. Ugh, just, you know, gives you a profit, but it's not, you know, it's making it tough. It's like dragging and dragging and dragging. And see, we are not invincible. We are only right 8.5 out of 10 times. So you can see there's a perfect example of the math after all this finally having a loss right there. You know, it goes into the sell, and then the next one puts you right back into don't be short. and then it gives you, it gives you the volatility signal, then it tries to give you a sell, but it can't because this thing's plus. Then it gives you the buy, and it doesn't go that far. I don't think it went a couple of handles. Let's see. It goes from 364.50 to 365.50. It only goes 3/4 of a point. It's dead. It's tight right now. There's no real healthy action in here. China's having a currency war with us over iron prices. Did I post that story? The giant that's collapsing? There was a great story over the weekend that talked about the one-child policy and how it's damaged their economy. That's why Xi is, President X is being so tenacious. They are having real issues, and they cannot have any dissenters. Look at Cuba. He's probably got the right sense, because look at Cuba. Cuba's right now has got picketers everywhere. They want freedom, and the military. There's all these pictures of the military, like not shooting at them, but like they don't know what to do. They don't want to shoot at their. More than likely, they're probably cousins and brothers and sisters that are complaining, so they don't want to really shoot them. And so and Fidel is gone, so maybe they're not as violent anymore. I don't know. We'll see. But you can see China is picking up on that same thing. There's probably a lot more dissenters than we realize. But one thing's for sure, the economy is collapsing there. That is very clear. So they have to fight for every scrap. All right, here we go. We're going to get a sell. Let's see what this does on the short term. Hong Kong, yeah, they're actually, I think the State Department is actually warning now that Hong Kong is not a free financial center anymore. Yeah, that would make sense. Move to Sydney. Well, Singapore has been collecting them up for a while now, but Sydney makes a lot of sense. Unfortunately, Indonesia it seems to be sinking. So they keep on moving those cities up in the higher land. Something's going on there. You can see. I understand NOAA moved their buoys, their tsunami buoys out of some of the areas because it's telling them that it's a tsunami. And it's not. It's actually the land itself is sinking underneath in the ocean. So they've removed a couple of NOAA buoys. Wow, look at this flat line. And this is obviously this is not the time of day to try to trade this at the moment. Look how flat it is. It's only going up a few cents, or not even a 1.5 and point down, half a point, 3/4 of a point. It's dead. But you know what? I'd rather show it to you when it's doing wrong than doing right. This way you will follow the rules more. Look at the way my manifolds are shrinking here on gas versus gas line up top here. It's just, and they're both collapsing. You can see that they're both collapsing equally because they're the same math. But you can see the standard deviation. It's gotten tight, which means in about 8 minutes this thing's going to get very explosive. There's going to be some action to it. And I do hope that some of those institutions, I know for years and years they've moved to Singapore. Singapore is a very solid place, and too bad they can't move to Taiwan. We've got all those chip companies there, and very healthy society, and there's about 80, 90 million, population, if not more, maybe 100 and some odd million now. Vancouver is a big center also, Canadian Vancouver. A lot of Hong Kongers moved there also. All right, anybody want to see anything else particular? Just shout it out. If not, we'll drift over to, where do we drift from here? We just got done looking at Canadian? Let me go over to the currencies again. No, it was OZZY because we were looking at the strike price thing. Okay. Boy, they've really parked that thing now, haven't they? It keeps on banging up against the 75 and failing. How do I use the VIX index? Here, I'll show you. We spotted that action that came last week before it happened. I send a lot of this out to some of the old floor guys, the ones that Robin and I knew that are old men now. We're old men. We're in our 60s. But they're like in their 90s. We were the kids back then. Here, I'll show you. Let's see, where's that? Let's go with this one. Right there. Here we go. Oh, let me do this too. Let me close something. Let's see, where are we at? I'm going to close out something here. I don't want too much stuff jumping around. Let's close that out. That's the greens. There's cattle. Let's go over to, and if anybody wants to see anything, just yell it out. We'll go back to whatever it is. And then let's go over to, where was I going? I think I have kitty cat Alzheimer's. Let's see. I was just going over to, wasn't, what product was, oh, I know, it was the VIX. All right, let's go look at the VIX. Open workspace, right there. I had kitty cat Alzheimer's in there for a second. You ever try to talk to a cat and the cat looks at you like, what? Okay, there's the VIX. And you can see we went into a buy here, and then we got the explosion and we got a volatility signal the next day, and so you're in the long here. Now if it had been reversed, you would have been long here and waiting for the explosion. In this case, that at the same time we had the Dow Jones Industrial Average collapse for 500 points this day at the same time. And so that was pretty cool. And then so you can see here we've got the weekly and the daily going on there. We're back in the daily sell here, but don't seem to be falling down too much at the moment. And you can see the weekly is actually, let's widen the weekly out. The weekly is actually trying to perk its little head up, which is kind of cool. You can see it's trying. That's the gas line 5 is the blue histogram, and the white and the green is the gas line 3, or that plot 1 and 2. And then what we do is we take a plot 1 from 5 and put it in there, and that's what the histogram is now. That's why we call it super, because it's showing you what 3 is doing with plot 1 and 4, and then it's showing you what 5 is doing with plot 1, which is kind of insightful. Now, when you say how do you use the VIX index, in a case like this, I saw that it was picking up before the collapse, and so you know, getting short. That's why I say I'm getting more involved in the trading than I do trying to rewrite code. And so you know, I put out a big warning 24 hours ahead of time to some of the old guys, and sure enough, boom, you know, it happens. And so that's usually the way it works. Now, if I'm really aggressive in options trading, which I am not, I am just a lazy old dog that buys bull spreads and put spreads and bear spreads and things like that. I don't really get that involved. But if you're trading volatility like I used to when I was a young man, you know, that's a whole different game altogether, where I'm buying 20 volatility and trying to sell it at 20 and a half or 20 and a quarter. I'm just trading the vol itself. So that's the whole different game. That's a different conversation. I'm welcome to have it, but you know, and you can go, and when volatility is high, you can go buy butterflies, and then when volatility drops, the butterflies become more valuable, and it's a very low risk factor. We try to do a lot of things around here on a very low risk. If you're only risking like 2% of your assets, you're you can be awful brave. When you put a position on and you're risking 60% of your assets, you're like a nervous Nelly. You're like that cat on the hot tin roof. You're like the one, you know, cow that refuses to follow the herd. You know something's wrong, and you know, and all the pigs always know what the hell's wrong. And so anyway, and the end result is that, or the goats, their ornery is a pain in the neck. But the end result is that you know, volatility is a good tool to see what's going on. Money runs to it really quick, a little ahead of the curve, and at the same time, the Federal Reserve just comes in and straightens that out quick. They don't allow it to go on too much. So that is what it is. All right, traders, anybody have anything else? And if not, I'll start to sing. That's usually what I do. I sing to say goodbye to y'all. But let's see, who did we miss? Let's go take a look at a couple of currencies real quick while I'm waiting to see if anybody has anything they want to look at. Let's see what ruble's doing. See, ruble's been in a sell for a couple of days, and it's been moving down. Went into that weekly buy last week right there. Matter of fact, we need to put that in there. And it's not holding up at all, which is very fascinating. So it goes into the weekly buy on Friday, and it was in the daily buy for that whole move up from there. And then Monday, or I guess it was Friday, there's the Friday, it pushes into a sell. So you get a weekly buy and you go into a daily sell, which means stay neutral. It's like, oh, darn. And then, you know, we start to go down, but we're in a weekly buy, so you can't really play the short side. Mexican peso. That's been a really good product for the last 6 months. We watched that. I like that. Mexican peso right there. You can see it's really trapped itself in this sideways action. We went into the weekly sell. This was really wild. We had this. We went into the daily buy here. We got this massive move. And at the same time, our weekly climbed into it right from the beginning. Gave us a weekly buy signal right here. Let's make that more solid. And then the following week, it goes, and right at the top, it goes into a daily sell. So now you can't be long. And then it goes down again, back to this area here, and it goes into a weekly sell. And so it's been in that weekly sell now for, what, 3 full weeks. And it really hasn't gone anywhere. You know, and then we went to a buy here for a day or two. You're not really playing the long, you're just making sure you're not short. Then it goes into a sell, and you can see it doesn't give you anything there either. It goes up and gives you a buy here, and this is a true loss right there. That one is a true loss because it's a green, and we're in a, oh no, it's not a loss because we're in a sell. So it's a 0. You're neutral again for that one, but this is the loss right here. There's the loss. I knew there was a loss somewhere. And then you get a volatility signal. With that, start to be warned again that something's going on. And sure enough, we go into the daily sell right here. Let's put that in. Goes into the daily sell there. And we're in a, and then at the same time, it doesn't go anywhere. And now it's lifting through the buy, and you're getting a daily buy out of this at the same time. So maybe this thing's going to go up. Maybe this one's the one that, this, whatever instigated this, maybe there's a second one coming to that. That's probably what we're probably going to see, is at least play up to the lows of this. Yeah, and that would be the way I would expect to read it too, just with that action there. Oh, let's go see what the S&P is doing now that the markets are open. Wow, it's... Look how lethargic it is. You know, went into that buy here. Let's see, where was it? We were watching it back here, right? Where was it? It was lethargic right here. Then it goes into the buy from the volatility signal, and that was okay, that won. But that's still like 7 minutes before the open. And it goes into a sell here, right there. Goes into the sell off of that one, but goes nowhere and loses. Volatility signal and a buy again for a win. And it still stays in there. Look at that. All the way up to there. And then it goes to sell, and then the volatility signal, and another win. There's your sell right there. Now it's back into the buy. Let's see how much it pops here. It's breaking down on the lines. We'll see. See if they have to wait. You have to wait for them to close. So in this case here, this has closed in a sell. There's no dot to it, so it's in a sell now. Now it gives you a sell here, but the histogram is plus. So now you're out. You take your loss, and now you let this thing play itself out. It's trying now. This one, did that go into a buy? Yeah, it went into a buy here. And all it does goes a little pop up in here. It's a really tight market here today. It's not really going too far. All right, we're going to sing our way out of this. Happy trails to you until we meet again. Happy trails to you, to all our cyber trading friends. All right, Dukascopy, catch you guys tomorrow. Tomorrow will be, it's today Tuesday, right? Yeah, so tomorrow will be Happy Hump Day. All right, ta-ta for now.